Great shifts in history are often defined by a single, governing illusion. For 2 decades, the digital economy operated under the illusion of weightlessness. Data, capital, and services appeared to move freely, unburdened by mass, friction, or geography. This was the existing order. But the rise of generative artificial intelligence marks a decisive end to that era. The new frontier is fundamentally physical. The demand to train and run frontier models requires an infrastructure commitment of staggering scale. Vast tracts of land, tons of concrete and copper, and electricity measured in gigawatts. The strategic race for artificial general intelligence, framed as existential competition, has become an industrial mobilization. Yet this mobilization is not led by state utilities or established conglomerates. It is led by startups, driven by enormous ambition and constrained by a singular financial paradox. They are building a trillion-dollar industry using systems that, on a unit basis, currently burn cash. This tension between boundless digital aspiration and brutal physical requirement is the underlying friction of the AI boom. It creates vulnerability not only in the companies involved, but throughout the financial and energy systems they seek to consume.
The system's stability rested on 2 pillars: cheap capital and abundant, low-cost power. Both pillars began to erode as AI's demands accelerated following the launch of products like ChatGPT in late 2022. The primary weakness in this new order was the unit economics of the technology itself. Running large language models requires costly inference, the computational work needed to serve each user query. When marginal costs exceed marginal revenue, profitability vanishes. Companies are compelled to seek scale to justify the loss, creating a perpetual demand for more compute. OpenAI became the central actor in this drama. Driven by the goal of AGI, its formative experience was defined by a rapid, costly ascent. But this acceleration came at a price. A Microsoft filing suggested the company was losing approximately $11.5 billion in a single quarter, driven by the enormous costs of training and service delivery. And estimates suggested certain projects, like the video generator Sora, incurred losses of $15 million per day. To break free of this structural pressure, OpenAI concluded it needed infrastructure on an unprecedented scale, dwarfing even the spending of its hyperscaler partners. They began looking at commitments totaling $1.4 trillion over multiple years, an aspirational target for a global compute network known internally as Project Stargate.
The $1.4 trillion commitment was not merely an aspiration. It was a demand for capital that conventional debt structures could not satisfy. Frontier chips, which represent the majority of data center costs, rapidly become obsolete, making them poor loan collateral. This obsolescence risk limited the willingness of traditional banks to finance the debt. Opportunity lay in aligning incentives with the supply chain itself. This required creative, often complex, baroque financing. OpenAI adapted swiftly, securing resources through strategic, high-leverage deals. They entered into a partnership with AMD, committing to deploy 6 gigawatts of their GPUs. In return, AMD granted OpenAI a conditional warrant to purchase a significant equity stake, a promise of massive financial upside contingent on massive deployment. Simultaneously, Nvidia, the dominant chipmaker, pledged up to $100 billion in reciprocal investment, an arrangement tied directly to OpenAI's consumption and deployment of their systems. This was not a simple cash injection. It was a powerful customer financing loop, locking the AI lab into buying the infrastructure it needed. Success depended on engineering complex debt and equity structures, not technological breakthroughs. These grand financial ambitions quickly collided with systemic limits, leading to both industrial and political conflict. The most immediate resistance came from the electric grid. Amazon Data Services filed a formal complaint against PacifiCorp, a major utility, alleging a failure to provide sufficient power for new data centers in Oregon. PacifiCorp's reluctance was strategic, protecting existing customers from disruption and the indirect harms caused by rapid, uncontrolled power demands. The critical confrontation, however, was in the political arena. OpenAI CFO Sarah Frier publicly suggested that the scale and risk of chip investment required a government backstop or guarantee. This, she argued, would reduce the cost of financing infrastructure that private markets struggled to value due to rapid obsolescence. This declaration triggered immediate, sharp resistance. Critics pointed to the irony: a private, high-valuation company simultaneously claiming national strategic importance while seeking taxpayer protection against its own business decisions. CEO Sam Altman, facing the immediate political consequence, quickly offered a public denial. He stated flatly that OpenAI neither had nor wanted government guarantees for its data centers. This contradiction, the necessity recognized by the CFO versus the ideology asserted by the CEO, exposed the high stakes and the fundamental instability beneath the surface.
The immediate resolution of this phase was a temporary reprieve, secured not by OpenAI's profitability, but by the relentless success of its primary infrastructure supplier. When Nvidia posted a massive 62% jump in quarterly revenue, driven primarily by data center sales, market anxiety momentarily eased. This outcome reinforced the new balance of power. The profitability of the AI ecosystem is currently consolidated within the foundational suppliers, providing a critical financial anchor to the loss-making innovators they finance. Yet the structural contradictions remain unresolved. The financing gap for Project Stargate still looms. The energy requirement, estimated at 10 gigawatts for a single major project, demands solutions that utilities and regulators cannot deploy overnight, leading to potential geopolitical competition for basic resources like power and land. Success and failure in this new era are less about individual ingenuity and more about constraints. The ambition of AGI required the mobilization of physical and financial resources beyond the capacity of traditional venture capital. The conflict now shifts from funding the initial concept to securing the planetary resources required to run it. The illusion of a weightless future has been shattered. The true cost of the intelligence boom is being measured not in lines of code, but in copper, concrete, and watts.